What is up, good people? Crypto Prepper here. Today is Friday, April 24th, 2026. Today's fear and greed index is 43. I think before I refreshed this, it was 55. So I can't remember. It's been a couple days since I did a video, but we are going to continue our way down the list here. And so I did a boo-boo. I actually started doing my research before I refreshed this page. So I am going to temporarily skip over Zcash and Canton and go to Stellar because before I refreshed, Stellar was actually up here. So that is what we're going to do today. We're going to find the best Stellar XLM trading bot for 2026. So, like we've been doing the past handful of videos, we are going to set our baseline using our grid bot. So we've got our grid bot 365-day backtest gave us a 17.81% APY. So that is pretty good. Let's go over the settings. And what I did was I went back to April 25th, basically 365 days ago, and I measured 60% down and 60% up. Oh, excuse me. And that gave me my good coverage of this last 365-day range. Okay, so um you can see here I've got my investment as 1,000, and then I changed the grid levels from 100 down to 50. So other than that, I just went to that day and then I did my measured move here with the price range. If you don't see the price range, you can click the little triangle thing there, arrow, and find the measure price range. All right. So that's our baseline. And we immediately beat that here with um, the XLM DCA bot that we set up. And we'll go over those settings here real quick. So I've got a better return with a 22% APY. And then the second thing I look for in these back tests is this continuation. So this bot has could was if you would have set this up 365 days ago, it would still be running. It would still be paying you. You would just got recently got paid only a buck 55 with this $1,000 investment. But the day before that, or no, 4 days before that, you got paid $6. So that's, 22% APY is more than you're going to make in any bank account. It's more than you're going to make in any DeFi staking. So, and this is just for keeping your XLM and USDC on Coinbase. All right. So, um, the third thing I look at in these back tests is I look at the activity that we have with these settings. So here we've got a nice little jaunt that we went without any activity. Looks like it was pretty much the whole month of June. So it's not ideal. I like to log in every week or every month and see that number go up, the your bot profit. So if you go a month without any bot activity, and this wouldn't have been profit, but it would have been you would have seen that you've picked up more XLM. Um, but I don't like to see a month. But that's like I said, this is the third thing I look at. Here we have about another month between November and December, and then about 3 weeks um, in between December and January. So, not the activity that I like to see, but we have a really great APY, 22.8. And here are the settings that we used for that. So we've got $1,000 investment, just like always. These bots can be scaled up as big as you want, but they need to be started with $1,000. So before you scale up that number, you're going to pop in your settings with the base order amount of 31.25, and then averaging orders number is going to be 968.75. Those two numbers added together gives you that $1,000 investment. That's all that the bot will use. Okay, so then our averaging orders quantity is 5. That's these limit orders here. And then the distance between those limit orders is our step percentage here at 7%. And then to get each one of these congruent I don't know the word, these limit orders to double, like you see here, from 31 to 62, the 62 to 125, and 125 to 250 until 500, you click and slide this amount multiplier on to X2. And then the amount multiplier here, slide that all the way off. Okay, so then our take profit tab here, we're looking at a price change percent of 5%. And our risk management pump dump protection is turned off. That most of the time will give you a better return with these DCA bots. In the grid bots, it doesn't matter so much because those limit orders are always just preset. So, okay. And you can see, oops, you can see here uh, that when we run our back test, it's still 22.8. And so you can see I didn't change anything. Okay, so then I wanted to compare that to my standard settings, and I have not run a back test on this. Actually, I probably did, just because I typically start with 5% order step percent, with everything else being the same. So you can see it's still $1,000 investment here. 3125 is our base order, 968.75, and then our amount multiplier X2, our take profit 5 here, our risk management pump dump protection turned off. And so the only difference is that I'm averaging orders step percent. So let's run a 365-day back test on this. You're probably going to see maybe a better return, but then you don't have the continuation. Yeah, so that gave us that 37.87% APY. And actually, it didn't fall out of range too too soon. So it survived all the way up to February, right before the February 5th capitulation there. Interesting. There's a lot of coins with those standard 5, 5, and 5 settings don't typically haven't survived that long in the last 365 days. So you could have, um, if you were looking at this, watching this, and uh, well, I really don't see any indication, because in the past coins that I've kind of looked, in hindsight, maybe this could have been it. So if you had this bot running and on January 29th, it ended up breaking this support that we had from April 7th, and that was Liberation Day, right? And the tariff stuff. So that was the previous low. And so once you break that support, you're going to be creating another lower low. So even if you waited until this bot purchased here, or DCA would have been here, and you would have taken let's see here. Your DCA would have been there. If you would have sold here, you would have taken a 7% loss after seeing a 37% APY. Well, at that point, not APY, but a return on investment wouldn't quite have been a year at that point for you, but you would have been like, oh, well, we just break major support here, or we just broke a year-long support. Not quite a year. Eh, but it wasn't a year, but you broke that support, and you're like, hey, I'm gonna sit this out and see what happens, and go ahead and take that 7% loss and leave with basically $100 or $1,300. Okay, but like I mentioned before, I don't like to play hindsight, the shoulda, woulda, coulda game. Uh, so uh, I want to see the continuation. I want to set these bots up so that they run. You just run them, and then they just pay you, pay you, pay you, and keep going and going and going. So when we see the continuation after a year, and especially this fall here, so we had I didn't measure this before, so its most recent high was 52 cents. So like most of the market, it's fallen 66%. Um, so after a 66% loss, you're still up 20%, and your investment is still working. You could close this bot today if you had it running, and you would basically walk away with your 1,200 bucks free and clear. But there's no reason to do that because it's this bot is just going to continue making you money. So no reason to shut it down. But that didn't beat out. Oh, and so what I did here was I played around with the take profit price percent and then the averaging order step. So our best one really, in my opinion, was this 22.8%. And that was with the 7% averaging order step percent and a 5% take profit. So hopefully that helps you in your bot journey here. If you're interested in XLM, you can set up your grid bot using the least liquid pair here with USDT, at least on Coinbase, and then set up a couple DCA bots and maybe range them between 5 and 7% here with the averaging order step percent, and you will be pretty happy. All right. Hopefully that helps. If you liked the video, give me a thumbs up. If you didn't like the video, give me a thumbs down. If you want to see more of these videos, subscribe to the channel. And if you have a favorite coin, leave it for me in the comments and I will run a bot for you. All right. Thanks for watching, and we'll see you on the next one.